Hello and welcome to NASCOM studio. We are at the Technology and Leadership Forum 2023 and I have with me Mr. Rahul Singh, COO Corporate Functions, HCLTech. Thank you so much, Mr. Singh, for joining us. How do you think India can leverage technology diplomacy to drive global leadership and influence in the sector?
It's very interesting. If you look at Indian technology, right, I think, there are really two segments. There's the exports part of India services, technology services, and of course, there's the India technology itself. The first one is the one which is really big and which is more globally known. Our technology sector services, I would say the entire Fortune 500 list of companies, the G2000 list of companies, and most of our companies also operate in almost every country in the globe. And therefore, given the fact that the reach is so large, and the fact that India on its own technology side, Digital India and other initiatives are taking great shape, right? It does enable a lot of technology diplomacy to happen because, you have the customers, you have the reach, and then you've got the case study in your home country itself. I think that really is what puts the two together. And our software sector, which really is based on the people-based model, access to a lot of people with technology knowledge, technology skills, does create a huge powerhouse in terms of what we can do because our clients already are there, and the technology in terms of the number of people gives us the ability to scale up services quite nicely.
You talked about so far the services and what drives it, the talent pool that we have. Is that enough to leverage, a technology diplomacy to drive leadership and influence? Because we're seen as doers, we're not seen as thinkers and innovators.
I think that is changing quite rapidly because, if you look at the services industry itself, it's almost 3 decades old now. And we have moved from, really being largely seen as a skill pool to a pool of innovation as well. And as I mentioned, our clients, which tend to be the global, Fortune 500 and G2000 customers globally, do now tap India for its innovative content of technology as well. And there's a huge case study in Digital India initiatives itself, right? So if you look at India as a country in terms of the way digital inclusion has taken place, that does provide a great case study. So when our clients look at us as a services industry, the fact that we have a large digital penetration within the country, kind of plays to both the skill base as well as to the outcome and the innovation that can take place. So I think that's changing quite rapidly. If this question was asked to me, but let's say 15 years back, I would have said that, look, it's largely a skill base. But today, it is more than just skill, and, for example, look at the number of startups which India has got, like the third largest startups in the world. If you look at the number of unicorns that India has, I think 70, 72 large numbers. The investments that come into the country. So all this creates an environment which is just not labor pool or cost arbitrage based, but value based and innovation based, and perhaps even developing new technologies as may happen in the future.
You spoke about the digital infrastructure that is being put in place in India. So how do you see technology being used to solve some of these socio-economic issues that exist in India?
So, let's talk of it from the point of view of inclusion. The most important thing about technology is that it enables the cost of units of production to be brought down dramatically. Now, I come from the financial services sector, right, which was essentially a very paper-intensive sector in the past. Like you write checks to make payments, and you fill up lots of forms to get lots of transactions done, and so on and so forth. Now, what technology has done is that it has reduced the cost to serve to a fraction of what it was earlier, right? So, for example, if you look at payments, I gave you the example of a check. Now convert that and look at the more mobile payment, UPI, and other payment capabilities that we have today. So the cost comes down. So when the cost comes down, your ability to kind of service and impact the lowest of the of the communities becomes better and becomes easier, right? So your reach suddenly starts increasing, right? And therefore inclusion starts taking place because the cost to serve is much lower. Not only is the cost to serve much lower, but also what happens is that the experience for using non-paper based kind of interactions with financial institutions is easier, right? For example, you can get your KYC done, you can get your authentication done, and so many other things which otherwise would have been manual. You just think of it this way. In the earlier days, you would have actually got to go to a branch to get lots of your transactions done, right? So a laborer would have to spend, let's say, half his day just getting that done, right? And a lot of people in the world at the lower end, are essentially, yeah, they cannot afford that time that gets spent. So with that elimination taking place, I just give you one example. Of course, you can multiply this by hundreds of products that are normally serviced through technology. So the cost of serve comes down, the cost of service comes down, therefore inclusion starts taking place. And then, a lot of the new products also are more consumer friendly, so they are more inclusive the way they are designed. So all this results in, huge penetration taking place in terms of inclusion, and access to financial instruments, etc., becomes very, very common. So I give you an example from the industry I'm more familiar with, but you can extend that to almost any other industry. Government service is another great example. Going back to the example I gave earlier, that just the time that you take today to kind of get government services offered is it's much faster, very, very quick, right? And therefore you are getting up, increasing the productivity, and therefore increasing I think both the cost that it takes to kind of fulfill the service, plus also the benefit in terms of the ease, the consumer experience that is much better these days.
You said the cost has come down, which is why scale is possible. But when it comes to the user interface, there is still, nagging doubt that users are not digitally aware. Even if they have the mobile, they may not be able to access these services. What do you say about that?
I think it's I think a lot of our technology spent today, I mean, even our clients do tend to spend a lot of their money on improving the experience. The consumer experience is very, very critical. Some companies and some products are better in terms of consumer experience, some are not as good. But there is a lot of focus in terms of making the experience seamless. I can assure you that. And when you compare that with some of the government services and government service which are digitally offered, I think over time you will find much improvements happening in any case. For example, let's look at payments. Let's say the way you make your, let's say, payments for electricity, or you make your property tax payments. These are all digital today, right? So yeah, I think improvements already happened. Our expectations have always been higher because we're used to using other products which are a little bit more superior. But if you compare just that particular activity with the past, it's much better today than it was in the past.
Right. Mr. Singh, you've been in this field for 3 decades now.
Yeah.
What kind of transformation have you seen in the financial services industry over the last 15 years because of technology, and what lies ahead?
Obviously, we've seen the complete elimination of, a physical interaction to take place for a financial transaction to happen. I mean, if you go back to 15, 20 years, 30 years, the branches are very relevant. You had to go to the branch to get almost every financial transaction done, to open an account, to make your transfer, to get a deposit book, to get a loan, to get in more commercial transactions like a letter of credit, etc. I think that entire change has taken place, and there is no need to kind of do a physical visit to a branch anymore, right? And paper has been eliminated from the whole system, right?
Earlier, more sustainable.
I think it's not only more sustainable, but it's also, I think it's more secure, right? Because once a digital transaction takes place, the paper record would have tended to get photocopied, and kind of all that could have happened. So that also starts getting more secure, right? So I think paper elimination of the branches, the quickness with which transactions take place, the convenience that it therefore gives to the consumer, are great things to happen. I also feel that I think risk in the system has reduced. So when I say risk in the financial system, because of paper-based transactions, there's always a gap like T+2, and for example, settlement systems that are there for our shares, etc. The time taken is reducing. T+2 is going to become T+1, is going to be T+0. So as that happens, I think the risk in the system also starts reducing, and therefore you have less ability of, in the future, hopefully less fraudulent transactions, etc. will take place. So it's not only convenience, but it's also improvement of the risk that takes place. And that is a huge change which has happened if you were to compare the last 15, 20 years. And it's happened obviously in India, but also globally. A lot of our major countries, similar things happening there as well.
So governments across, lesser risk in the financial system will definitely be very welcome. But this leads me to two questions. You say the risk is reduced, but is the trust there? because you're saying that, because you don't have to go to a branch, you don't have to see a face, there's no human interface. Is the trust there? Plus, what happens to job opportunities and skilling and employment when technology is moving at such a fast pace and automation is happening everywhere?
Yeah. So let's address both the questions. Is trust there? Trust builds over time, right? Brands are there which are more trustworthy versus other brands, and so on and so forth. So it takes time for that trust to happen. We do know that technology can be extremely secure. So people who understand, who go into the depths of cybersecurity and other means, etc., they know that you can build a lot of secure data networks, etc., can be built. But the trust in the consumer, may still take time to happen, right? Because he is more used to the physical transaction versus digital transaction. So it's a matter of time. For example, if you look at small statistics, like if you look at the payments that happen electronically in India today, it's been growing like 30-40% a year, right? And I believe it's the top 5 payments in terms of volumes now take place within our systems here. So the trust has built, right? It will only become better in the future. Next question was, what happens to jobs? Does technology and automation result in, technology and automation actually results in new kind of jobs getting created, right? That historically that's been the trend. Way back, I would say back in 70s and 80s, when that is in the financial services sector where technology first came in, it was felt that it will remove a lot of effort that goes into manual ledgers and stuff like that, but never happened that way. It's except that what really happened was the inclusion of financial products started increasing. More people had access to mutual funds, more people had access to stocks and shares, as an example, more people had access to banking accounts, and so on and so forth. So the volumes increased, and that's the number of people employed kept on increasing. I think going forward, you will find that the nature of work will change, right? There will be more people which will be required to do things like, data analytics. You spoke about cyber security. So the types of work that will happen will change, right? Maybe some of the routine mundane activities will not be there anymore, but there'll be more involvement. For example, customer relationship oriented people. People who are responsible for educating lots of people about the benefits of financial inclusion. So those kind of jobs will increase. I'll give you an example. So for example, many of us do benefit from finance as a for example, financial freedom, right? Which is that you have certain amount of wealth, and therefore you can take care of your future, and so on and so forth. Now this access to these kind of tools was only to a certain strata of society. Now with financial inclusion increasing, access to financial products will go down. So insurance products will be available to many people in the world. Loans will be available to more people in the world, so on and so forth. So many financial products which actually enhance the quality of financial security will start increasing. Now to make that happen, you don't need only technology, you also need people who understand that, who can explain that. So I think the relationship roles, the roles which are about data analytics, the roles which are about experience will be increasing over a period of time. And the more mundane paper-based, reconciliation, back office, etc., that's where you'll find reduction. But I think overall, technology has never resulted in a systemic reduction of jobs. I think systemic jobs will increase, but there'll be new types of jobs. Perhaps more higher value-added jobs will get created.
All right. Thank you so much, Mr. Singh, for speaking with us. And we look forward to speaking with you again at the NASSCOM studios. Thank you.
Thank you.